Well, ET now spoke today with Manish Sonthalia of Motilal Oswal AMC to try and get a perspective as to what his outlook is on the trajectory of the markets, the overall valuations, where he's seeing momentum, his outlook on the rate sensitives as well as defensives. And here's what he had to say. Well, he's very firmly of the view that this is clearly a buy on dips market. He believes that on every dip there is an opportunity to enter and there are very lucrative sectors to look at. On account of the COVID worries, he's pretty confident that the second wave of COVID is only likely to be a very temporary factor that we will likely tide over with respect to the vaccination progress. In terms of sectors, what is he looking at in the markets? Well, he believes that cyclicals are strongly correlated to the recovery and will likely do better in the long term. In fact, he's expecting a rotation trade to play out in the markets, and that will largely be tilted towards the industrials, according to Manish. He's overweight on industrials and believes that this is definitely a sector to look at if you want to play the recovery theme. In fact, he believes that one should be trying to get a foothold in some of the names within the industrial space, which is what they're currently doing as per their strategy. Manish also said that he's bullish on select pharmaceutical names. He likes Gland Pharma. When it comes to SBI as well, he's pretty bullish here, and he believes that the Q3 numbers have been very encouraging and that some of the PSUs have been trading at ridiculously low valuations. So Manish is of the view that there is definitely a lot of merit within this space, and you can look at SBI closely, optimistic on the kind of earnings growth that we'll see going forward. So that's Gland Pharma as well as SBI. Moving on, he believes that one needs to have some deep value stocks in the portfolio. That's very crucial, and that he believes that currently there is a lot of deep value that's emerging within the tech space, and that has not been factored in just as yet. In fact, he's of the view that the digital shift, the cloud migration, all of that is really going to bode well and be value drivers within the technology sector. Manish is also of the view that as of now, the bumper performance that we've seen in the pharma stocks during 2020 lockdown has been very impressive. In fact, he believes that the valuations within select pockets of pharma as well look fairly reasonable at the current levels. And he believes that it's apt to remain overweight on the pharma sector. As of now, he believes that there is ample liquidity as well in the system, and that the government spending is looking very healthy. The positive effects of the government reforms are starting to look very visible. And when it comes to the auto sector, the severe shortage of semiconductors, that is something that is hurting the sector. But he doesn't believe that the auto demand is likely to go downwards. The situation is not as bad as it was in the last year for the equity markets as a whole, and the markets are gyrating between a risk on and a risk off trade. And he believes that the ingredients required for industrial revival are available.